Bridger, welcome to the Wealth Juice podcast. This is an exciting one for me because I was literally stalking you on Instagram. And actually, you were just
hopefully not
up.
too close, Corey. Hopefully not too close. Okay.
Yeah, from a distance. I'm in Philly, so I'm nowhere near you. But you were popping up everywhere. I was like, Ryan and we've built our real estate portfolio, but we've talked about crypto recently on some of our shows, and I don't know, it's the algorithm speaking to me, man. So I reached out, got in touch with your people, and you have such a big brand, you have such a big presence, you love talking about funds. And so I'm really excited to have you on. I appreciate you taking the time.
Yeah, this is going to be great, man. I'm excited to help, work with you and your audience. This is our first time meeting, but I know. I looked at your stuff before, Wealth Juice. It looks awesome. So well done on what you built.
Appreciate it, man. Yeah, we're going on year 6. So I just like having conversations with cool people like yourself. So for people that don't know you, man, like give me a little bit of a background on who you are, where you're from, and like how entrepreneurship has played such a big role in your life.
Yeah, I'll give you the 45-second version, and then we can unpack it more if you want. But I grew up in Salt Lake City, Utah. I'm kind of, people are like, you're in Salt Lake? I'm like, yep, in Salt Lake. So I grew up in a normal household, nothing too special, very entrepreneurial household. I went on a 2-year church mission for the Church of Jesus Christ Latter-day Saints. I went to Taiwan. I spoke Mandarin Chinese. So right after high school, I left the country for 2 full years. Every day. If you ever seen Mormon missionaries, that was me for 2 years, which was phenomenal. We can talk about that if you want, but it was a crazy thing. I always say, people are like, how do you handle rejection? How do you raise money? And I'm like, dude, you go sell door-to-door religion in a foreign country, in a foreign language for 2 years. Everything is easier after that. You know what I'm talking? It's anyways. And if you ever see Mormon missionaries, just wave at them, honk at them, smile at them. It's sometimes it's pretty hard being a missionary. It's full time every day. And anyways, crazy experience for me. I came home. I started 6 businesses my first 2 years of college. I did real estate wholesaling. I did website building. I started a Chinese tutoring business, etc. And my dad grabs me and he goes, Bridger, you're kind of like a chicken with your head cut off. I want to help you out. I'm sorry, I'm going over 45 seconds here, but I'll dive into this for a second. But he goes, go talk to my business partner. This guy can really help you out. So I said, great, I'll go talk to whoever. I go drive to this guy's house. I pull up. My dad's business partner lives in this huge house, gated community, massive home. I knock on his door. I walk into his house, cars in the garage, basketball court in his basement, pool in the backyard, very wealthy individual. And we lived in a very normal house. My dad drove a car with a dent in the door, nothing bad, but nothing special either. I sit down with this gentleman and we start to chat. And I just say, how did you get all of this? What did you do to do all this? And I go, I'm trying all this business stuff. Give me some advice here. And he goes, Bridger, in my 20s, I was a lot like you. He goes, I tried a ton of different business models. I was doing all sorts of stuff. And actually, he goes, I actually had moderate success. I did okay. But then he goes, then I figured out the secret of the ultra wealthy. He goes, the secrets of the ultra wealthy families of the world is they want all of their kids to eventually end up in the fund world. That's the world of hedge funds, private equity, venture capital funds, or come back home and run the family office. This is the world of the ultra wealthy. And he goes, I finally figured out what this was. And he goes, we took a couple of years, but we figured out how to launch a real estate private equity fund. And at the time, they were managing over $8 billion. This is years ago. So $8 billion of capital. To put that into perspective, that is 2 times bigger than Cardone Capital today. And I think today now they're, over 40 something billion dollars and have done extremely well. I was enthralled. This guy was talking to me and I said, can I learn more? Can you be my mentor? Can you teach me? And he goes, Bridger, go talk to your dad. Your dad knows way more about this than I do. And I said, no, my dad, we live in a normal house. He drives a normal car. You live in a big house. You drive a nice car. I want to learn from you to that effect. And he goes, and later on, I come to figure out, he goes, Bridger, me and your dad make about the same amount of money. And my chin dropped to the floor. And I left the dude's house. I drove straight to my dad's house. I was like, Dad, what the heck? Why haven't I been able to order a soda at Chipotle for the last decade because it's too expensive and we're all, no drinks at dinner, no dessert, and yet you're managing a multi-billion-dollar real estate investment fund. Where's the disconnect? To make a long story short, my dad kind of laughed and smiled and said, yeah, we run these big funds. I'm just more conservative with my money. My partner likes to spend his money, but yes, we run these big funds. And so over the next 6 months, he started to teach me about investment funds. We get on a whiteboard, he teaches me about how funds are built, how you raise capital, how the SEC works. And like anything in life, once you learn something, you start to recognize that thing in your life. So I was in college. I was 22 years old at the time. And I saw an opportunity to launch a fund in college. I was in school and working a job. The job I was working at, there were clients coming through that needed funding. We thought, could we build a private credit vehicle, a debt vehicle to lend money to these people? I took it to the owners of the business. They loved the idea. We started to structure this fund. And I'm 22 years old and I'm putting this fund together. And I failed to mention my brother is an investment funds attorney. So I tapped my brother, my dad, and we're all kind of think tanking this little micro fund. And I'm putting together, I got it all ready to go. And I'm like, crap, I got to raise money. Who's going to put money into this thing? And it's really just me. I'm the only one running it. And I'm like, I'm just some punk college kid. Like, no one's going to invest in me. And I thought, well, I'll go pitch my dad. I'll just get my dad's money. Apparently, he has a bunch of money, doesn't spend it on cars or us kids. We're not going on vacation. Like he might want to invest. So I went and pitched my dad on a late Sunday night. I went and pitched him at his house, and he lovingly said, Bridger, I have the money to invest, but if I invest in your fund, I will ruin the experience of you raising money on your own. And he said no and kicked me out. And I kind of walked out with my tail between my legs a little bit. But he said, I'll show you how I've raised money in the past, but this is a lesson you've got to learn. Your first investor is your hardest investor to find. If I invest in your fund, it will ruin the experience of raising money on your own.
So if you've ever tried getting a mortgage, which I'm sure many of you have, you know how daunting and discouraging it can be of a process. The slow process, paperwork, being told no without any real explanation. One time we were even told that taking out a home equity line of credit on an investment property wasn't even possible. So that all changed when we were introduced to Neo Home Loans. What makes Neo different is literally how they approach lending. They're not just checking the boxes, they're legit problem solvers. They look at your entire financial picture and explore multiple angles, literally until they find a strategy that works. They helped us reposition our portfolio, pull out lines of credits to scale, and structure everything for long-term growth. And on top of that, their rates were some of the most competitive that we've seen. They just literally did whatever it takes to find a solution. For us, Neo has become our liability advisor. The same way you have a financial advisor on the asset side for the liabilities. If you're serious about building wealth through real estate, it's worth sitting down with them and getting your lending strategy dialed in.
And so that was a tough love moment for me. Yeah.
I find interesting here, and sorry to cut you off, but it made me think, I've talked to multimillionaires, maybe a few billionaires. It's not really about the dollar figure, but I've just talked to a lot of wealthy people. And what I found interesting is your dad waited for you to figure out that this is what you wanted to do rather than pushing you in a direction like, this is how I made the money. They didn't even know that he was making money that way. I'm curious on I feel like that's probably made you so much better for it, right? Like you've discovered that you wanted to go down this route. Can you speak to that a little bit? Like that's an interesting dynamic.
I think my dad and mom were excellent parents, still are excellent parents. Now, my dad, he didn't never talk to us about business. He talked to us about business all the time. My dad was very, growing up, taught us kids a ton about just finance and how the world works. What's a credit score? How do deposits in a bank work? What's fractional reserve banking? How does business operate? What is insurance? Why do you pay for insurance? Like when I'm 12 years old, 13, 14, every time we drove in the car, my dad would turn off the music and just ask us questions. He's like, do you guys understand how a credit score works? Let me like, Bridger, what do you think? And it taught us a lot about the world of finance, business. But what I'm saying, I knew he was in the financial world. I just didn't know to the scope. I had no clue the size, the magnitude, the scale. I just thought he ran a kind of a small business and they did some real estate. I knew he was in real estate, but I didn't realize it was $8 billion of real estate. I didn't realize that this is like the creme de la creme of what people want to get into. And my dad was incredible at coaching us kids to, and a couple things. There was no expectation of money ever in my household. I knew, and I still, by the way, to finish that story, my dad never invested in any fund I've done until 8.5 years later, he put his first check in. It was about 6 months ago into one of our funds. That was it. So 8.5 years, he's never invested. It was a small check. It was the minimum investment he put in. And there's no expectation of money, right? So my dad did a great gift to us kids because I meet with a lot of wealthy individuals as well. And you see a lot of wealthy families that their kids are rotten and depressed and sad and don't fit in and there's too much. And at least my parents, it was, hey, my dad's like, my money's my money. You got to go make your own. Now, I'm a great coach. If you need a coach, give me a phone call. Like, I could pick up my phone right now and call my dad at any moment of the day and he will answer. I do this all the time. Like, Dad, he doesn't own any of my companies. He's not on my board. He's just my dad. Dad, I got this problem with this employee. They're fighting. What would you do in that situation? Oh, let me tell you, Bridger. He's got this sage wisdom. So what my dad gave me was coaching and mentorship, and he didn't give us money. And that was the best gift. And I think most parents flip that. They give their kids money and they don't give them coaching and advice and life lessons. And my dad did a great job of that.
I'm not a parent yet, so but I've taken so many lessons from people that I've talked to about what to do and what not to do, and I've realized that, it's like the kind of like teach a man to fish, right? That whole thing. It's like, if you're giving your kids the thing that you strive so hard to get, then what value do they have to bring in the world to feel like that they can make money themselves? So I think he did something right. So and a lot right, and I think you're both your parents. It sounds like, so that's awesome, man. But as people are listening to the show, they're like, hedge fund, like fund manager, it seems, and I'm just giving you the perspective, even though Ryan and I own a bunch of real estate, I'm like, this is so next level. Like, how can anyone just like start a fund, right? Now, we've raised capital, we're general partners, we've done some of that, but if you're driving, listening to this, or you're like, you have something on your YouTube, the first video that pops up is how to start a hedge fund from scratch in 2025. Now, we don't have 30 minutes to go through this, but I'm curious, how is this possible for anybody to start a fund? Like, how does this actually work? If you want to take a few minutes and just share, because I'm genuinely curious too.
Yeah. If you're listening to this, you're like, well, Bridger, like, yeah, it works for him. He had a dad that helped him. And it's like, yeah, it did work for me because I did have a dad that helped me. Now, we didn't go to Ivy League schools. My dad, he went to the University of Utah, got C's and B's. We're in Utah, for crying out loud. We're kind of off market. None of us went to these nice schools or institutions. I'm a college dropout. I didn't finish school, because what happened in school, we launched that fund, and I sat there and go, man, I recognize the uniqueness of the position I'm in. I have an amazing dad and a brother. My brother's an attorney. My dad ran a huge fund, and I have access to other people. What if we shared this with the world? And so what we started to build was YouTube videos and a course and a program, which we built Fund Launch as a company. And Fund Launch just has taken off. We just hit the Inc. 5000 for fastest growing companies in America. And essentially, so if people have that objection, I'm like, dude, my dad actively talks and is at our events. Like, just come borrow my dad. Take him as your dad. Take my brother as your brother. Like, that's what we built. So back to your question.
Rich dad, poor dad thing right there.
It's kind of the same idea. Yeah. Come borrow. Just like, and that's what we've helped now hundreds of people launch their funds. So back to your question though, how do we help people launch funds? So we have a framework called the Fund Launch Formula. After interviewing and working with now hundreds of fund managers to launch their funds, we're launching about 2 funds per week, every week right now. We found this distinct formula. So for someone that's like, Bridger, I want to launch a fund. If you Google that, most blog posts, and by the way, blog writers have never launched funds, but their blog post would say, go hire a lawyer. So most of the time, the advice you'll get is hire a lawyer. Your lawyer will teach you and work with you on your fund. The cost is anywhere from about $30,000 to $100,000 to build a fund. And you're going to work with your lawyer and kind of put it together, and hopefully investors invest. And if they do, great. And if they don't, well, you're stuck with a $30,000 to $100,000 legal bill. What we found was that was a horrible way to launch funds. And actually, most people that built funds didn't do that. They did our process. There was no name behind it. We finally coined it, called the Fund Launch Formula. But what we do is, step one, we work on, I'm going to go very quick through this, but you can check out the longer YouTube video. We work on your deal and strategy, your thesis. So if you're doing real estate, for example, what are the actual underlying deals and properties, and can you replicate this over the next 20 to 25 deals? What's the deal flow, underwriting, closing process? And do we have asymmetrical risk? Which is a fancy word for meaning, do you have relatively low risk for relatively high reward? That gap, that delta, is called asymmetrical risk. Do you have that? What is your edge in the market? Let's work on that first. Secondly, let's then structure the fund. This is before you talk to a lawyer. You should understand how funds work. What's an American and European waterfall? How does carry, catch up, waterfall distributions work? Are you going to run a 3C1, a 3C7 fund? These are all stuff that we teach on our YouTube channel and other places. Most people at that point, okay, I got a great idea and I've structured the fund. Let's go call a lawyer. And I was going, hold on. Before you talk to a lawyer, go and pitch this investment to real people. And go ask, don't ask for money, ask for advice. So find the third step. So step 1, great deal and strategy. Number 2, the framework of the fund. 3, put that into a pitch deck and actually go ask for advice. Find people that you know that are mentors or coach, people that you look up to. Do you have 12 minutes I can run you through my investment fund idea? I want you to pick it apart. Why would you invest? Why would you not invest? And 2 things will happen. Number 1, they will give you lots of good advice. Or number 2, they'll say, is this actually a real deal? Like, I actually would love to put money in. And you keep iterating on this 3, and I'm using a circle here. I have a big draw diagram, but it's a circle. You do that until you have validation on your fund. Once you have validation, meaning you have investors lined up, you have million, for our fund, I'll give you a quarter. We had about 20 million lined up, interested to come into our fund. We then went to legal. And I walk into a lawyer's office. I go, hey, I want XYZ with a drink and a side of fries. And they go, bam, they build my docs. I pay them by the hour. It's way cheaper. It's not 30 to 100 grand. It's like 5 to 10 grand, maybe 15 grand. And usually they charge 30 grand, but with me, because I know everything I want, they just take orders and they just build my docs for me. Then we launch, we file our Form Ds and file at the SEC. We're a live fund. And then we go close the capital. Now, like I said, we had 20 million lined up. By the time we had closed and actually asked for dollars, 10 million came in. The other 10 million was, we got to wait on or think about it or call us in 6 months. Anyways, close it. We started buying property and deals and investments. And then we go from there. We build out our firm. So in a nutshell, we call this thing the fund launch formula. It's how entrepreneurs launch funds. It's this effective, efficient way to build funds. Most funds never actually launch. Most funds that people do never actually get to market because they're building a fund that investors don't want. What we specialize in is building funds that investors do want. Does that make any sense?
Yeah, it makes perfect sense. And for me, my only experience in raising capital and putting deals together we buy 5 to 30 unit multifamily in New Hampshire and Vermont. With our partner up there who's boots on the ground. And I love the model. Institutional money doesn't really touch it. I can go to friends and family. We're raising, $500,000, $1 million. We're not raising a ton of money in the grand scheme of things, but I love that we can slow and steady build up our portfolio. But I'm curious about the things outside of real estate. Like, people come to you with like a business idea and they're using fund launch to try to raise for their business idea or for other investments. I'm so like pigeonholed, and just my thought process is real estate. Like, is your experience that most people come to you for, multifamily, or how does that work?
We get some crazy ideas at fund launch. And so we'll work through those, but about 45% of the people that come to us are real estate, some capacity. The next chunk is private equity and venture capital. So they want to buy businesses, or they own a business. They want to buy their competitors, or they want to buy their supply chain and they want to roll it together. Or venture capital, they want to invest into early stage startups. The next category would be hedge funds. So hedge funds they're trading the public markets. And then finally, there would be private credit, which is lending. They're lending funds out. And then I would just call it other. We have some pretty interesting funds. But to clarify all those terms I just shared, they all are exactly the same, almost. A real estate fund, a hedge fund, a private equity fund, it's all it is just a pool of money. You're drawing from that pool to make investments. And whenever those investments make money, you just split the returns. It's like the oldest business model on earth. It's not that complex. And they use all these fancy words, but like a real estate fund is a pool of money and you buy real estate. And then when the real estate makes money, you split the returns. A private equity firm is exactly the same thing. It's a pool of money, but instead of buying real estate, you're buying private equity, meaning privately held ownership in businesses. So you can buy laundromats. You can buy we have guys doing dental practices, other guys buying HVAC shops. That's private equity. A hedge fund, it's the same exact thing. It's just a pool of money. Instead of buying real estate or private companies, you're buying public security. So stocks, options, bonds, crypto, they're all very similar. Anyways, but that's the categories we work with. Yep.
Bridger, it's funny that you say this because I've been an investor for a long time. And I know this may sound like elementary to you, but even for me to hear that, this is the differences in these funds. Like, I think there's this world Or even I think, oh, hedge fund, private equity, that's way above my pay grade. I'm not even touching that. But it's like, for you to break it down that simply, like that's really what it is. Like, it's just a pool of money to buy specific
You
things.
mentioned you're a GP on some deals, right?
Yeah. Yeah.
It's the same thing. It's a GP LP structure. You have a management co, and you just buy, you buy companies instead. Dude, you're already in the space.
Yeah. Yeah. I mean, we're in the, we are, you're right. So I appreciate you breaking that down. What I've seen is pretty cool. So you pop up on our Instagram feed a lot, and being that you're a fund manager, I always hear you talking about the markets. Now, whether that's the crypto markets or stock markets, it sounds like, I mean, you're really an expert on what's going on macroeconomic wise and micro, like all of it. I'm curious if you're willing to share kind of what your thought process is, maybe personally, and like what you're buying. And I'm sure maybe you're investing in some of the companies, but like, what do you see going on? Maybe you can talk stock market, you can talk crypto. We've been talking about crypto a little bit more recently because of the digital world and how the influx and how it's becoming adopted institutionally. And like, I love Bitcoin. I don't touch any other crypto. Maybe you could debunk that for me, but I'm curious what you like and what you're buying and what you're seeing.
This is a fun question. And I'll just say this. I'm no expert. I talk to a lot of experts, and I try to make my own thesis. And this is not financial legal advice. This is just how I see the world, and I could be totally wrong. But I'll just share.
By the way, I'm just going to put that caveat in there.
Hey, good caveats.
Yes.
Always have. Yeah. Good caveats. But I'll talk big picture for a second. And then we'll kind of granular down to, I think crypto is so exciting. I run a crypto investment fund. We manage about 25 million in crypto right now. I love crypto. And we'll talk about the AI bubble or not bubble. I'll start big picture though. This is what I think about the world currently. We are sitting in a very unique moment in history. If you look back, there's been certain times where multiple technologies have emerged at once. So the early 1900s, you had electricity, the telephone, and combustion engines all come out at the early 1900s. And what happened was real GDP growth went from about 0.5 to about 2.5 to 3%. Massive increase. And that stayed for the next 100 years till about right now. We had the internet come out. So you had the internet and personal computer. And that was a huge wave, obviously. The whole world has been impacted and changes. Trillions of dollars have been made because of the internet. Right now, we are seeing the emergence of 5, some would argue 7 to 10, but I'll just name 5 emerging technology platforms at the same time. We have never seen this in the history of the world. I love to talk to older people, right? Because they have a good breath on life. My business partner, Dan, he'll laugh that I'm calling him older, but he's in his mid-50s. He's been on the board of Intel for 16 years. Intel's board of advisors, on the board of AMD, a big chip manufacturer, has done Inc. 5000. Very impressive individual. And he remembers when the dot-com era happened, and he made lots of money during the dot-com era. And he goes, I thought that was the last moment in our lifetime. And he goes, right now, we're seeing this moment again. And those 5 platforms and they're all, what's cool is they're converging. So obviously we have AI turbocharging everything in this place. But we have blockchain technology. We have emergence of fast internet, 5G or 6G internet, and global high-speed internet. We have quantum computing and multi-omic sequencing, would be what Kathy Wood says as emerging platforms. And then on top of that, you have the effects of that. You have 3D printing, the effects are, you then have things like space travel becoming online and other things like that. We could dive into a bunch of emerging technologies here, but what's cool is the convergence of them. For example, self-driving cars, or heck, flying cars, have never existed really yet, because to have I forgot robotics. Because to have a self-driving car, you have to have really good robots that also can think well. You need AI, and you need fast internet to communicate with servers or the interwebs. Those 3 things have to come out all at the same time to actually get you a flying car or a self-driving car. And all of them compound and help one another. As robotics get better, it helps the other aspects of those fields as well. And as AI turbocharges everything, it's pretty interesting. So I see this macro wave we are in to be huge. And we also have the president of the United States, Donald Trump, recognizing this and saying, we want to be the AI capital of the world, the crypto capital of the world, and really turbocharge all of this. Right now, there's 8.8 trillion with a T of foreign investment in the United States. So this is a crazy time to be alive. I think our grandkids will look back and be like, Grandma, Grandpa, what were you doing back in 2024, 5, and 6? Wasn't it so obvious?
Yeah.
Didn't you recognize like that it was, that's how we talk to our parents about the like, Dad, why weren't you in the internet? Dude, we would like, or a lot of people look back at like the 1950s, 60s, the golden age of America after post-World War II. Grandpa, why didn't you just buy like 30 houses? Well, it's the same thing our grandkids are going to ask us about today. Why didn't you take advantage of the beautiful, you had the president of the United States, every industry leader telling you what was happening on every news interview they do, and you still were like, nah, it's a bubble. It's going to pop. It's not going to work. Now, let's talk the bear case for a second. So a lot of rumors and conversation right now about an AI bubble, and this comes from circular capital flow. So you have OpenAI at the center of it. Oh man, look at this. I'm getting hearts on my thing.
I've never seen that before. That's pretty cool.
That's crazy. Look at that. I was getting hearts. Wow. That's crazy. So you have OpenAI at the center of this. And for example, there's a chart of them investing into Oracle, for example, like a $500 billion investment to Oracle. Oracle then invests into Microsoft, for example, who then invests into OpenAI. And it's this circular trade that makes all these companies look really good. Or they're buying NVIDIA, or, you name the company. They're all sharing capital with each other, and it makes all their balance sheets look good. That's, people say this is going to unravel, which maybe it will a little bit. They're like, it's just like the dot-com bubble. But I go, hold on. I think this is a little different. Number one, you have the smartest, largest, most capitalized companies on the world building this. The dot-com era was kind of these startups all building it. This is $5 trillion companies building this with the smartest, most capable humans on earth building AI. Number two, this is the last invention humanity ever needs to create, is artificial intelligence. What's the cost of the last invention ever? Well, right now we spent about 1.1, 1.2 trillion on this so far. Sam Altman estimates about 10 to 15 trillion total. What's the cost though? The cost seemingly is infinite because pending it works, is the last invention we'll ever need to create. Furthermore, you have governments that need it for national security. China and the US right now are in a global AI race. If we don't do it, China will. And if China doesn't, we will. And whoever solves it will be the dominant superpower. So as a country, as a nation state, what's the cost of this thing? Kind of everything. If you don't do it, they will, and we will also be speaking Chinese in a few years. And so people say the AI bubble is going to pop. Yes, could evaluations come down? Sure. Are they going to crash? In my opinion, heavens no. I mean, these are the most capable, sharp, and there's real output. There's real use cases that we are using every single day. I cannot be more bullish on the economy. I know the Shiller PE ratio. I know price to earnings is like 40. At 40, the mean is 16. I know the bear cases, but I think we're in a different time where GDP growth actually, like Kathy Wood says, could be to a 7% annual GDP growth rate by 2028, 2029, with all of the inflationary and deflationary effects of these emerging technologies all at once. So I'll pause. Any comments on that?
Well, I think it's fascinating. I like to think about this more like holistically, Bridger. Like if, I was born in 1991, so I'm 34. And I was, even just I was going to throw an example of like my dad who was born in the 50s. But okay, let's just take the 90s. If you were to come to me, let's say I was 34 in the 90s, and you were to say, yeah, Corey, when you're 60 or whatever, in 30 years from now, that you're going to be speaking to Bridger in Utah with your microphones and your cameras and your internet and your research, and you're going to have a live conversation with him across the country. I think more people need to realize that the world is going to look so drastically different. It's not even fathomable to think about that. One, that's scary to me. I'm nervous about it. But two, the opportunity is, like you said, infinite. So if you believe that technology is now inevitable, which you couldn't prove me that it's not it is. It's inevitable. It's maybe what happens to humans. Maybe we combine with robots. I don't know. I hate that, but maybe that's what happens. I guess my whole point in saying this is what you're saying sounds correct. It sounds like it's inevitable that these technologies are going to happen. I, as the common person, I can't really do much about it. I might as well try to take advantage of it, right? So that's where my head is, which leads me to my next question. Let's say you're the common person, maybe it's us, whoever. and you're working a 9-to-5 job and you're like, I need to get ahead of this. What do you do? Do you invest in do you have specific stocks? I know it's not investment advice, but do you have specific crypto that you like? What can somebody do to try to get on the other side of this and not miss the wave?
Well, I'll just tell you what I'm doing.
That's kind of what I actually wanted to know.
Yeah, I'll just tell you what I'm doing. Number one, a lot of these companies are public. You can buy into their shares, which is pretty interesting. Number two, though, I am positioning my companies to take advantage of this wave. There is a tidal wave hitting right now, and I do not want to miss the wave. I think number one is building a fund around those things. So let's take crypto, for example. I am fascinated by blockchain. I think blockchain is the future of finance. And I first got into blockchain in 2017. My partner got into in 2013. He built the largest crypto mining facility in the state of Utah in 2013. And we dreamed of the day that large institutions will start adopting crypto. If you've been watching the news this year, you have JP Morgan, Fidelity, Vanguard, BlackRock, Charles Schwab, MasterCard, you name it, all building and adopting blockchain technology right now. This is it's like when online banking came out or when the credit card came out. It doesn't matter if you like online banking or not. Some people didn't like it. I don't trust the internet with my credit card. Whether you liked it or not, everybody uses it now. Blockchain is that much more efficient. And so for me, I was like, okay, I started to buy crypto. And then I thought, what's a great vehicle for me to play in this game? So I built a fund. I built an investment. I built a $25 million crypto investment fund. We raised capital from investors and put that money in. And how funds work is we split the profits 80-20. So 20% goes to me and my partners, 80% goes to the investor.
Hey, let me pause the episode real quick. Let me know if this sounds like you. You're making 6 figures, you're climbing the corporate ladder, investing in your 401k and your Roth IRA, and maybe even a brokerage account. But deep down, you're asking yourself, is this really it? Like, am I just going to do this thing for the next 30 years and hope to retire in my 60s? That was exactly us just a few years back. We were curious and excited about real estate, but overwhelmed and without a roadmap. If you fast forward to today, we've built a portfolio of over 80 cash flowing units and grown our net worth to over $2 million. We made it our mission to help busy professionals like you take that same leap and start building generational wealth for yourself and your family. That's exactly why we created the Wealth Juice Inner Circle, a private real estate investing community designed to help you get your first rental property under your belt in as little as 90 days. Inside, you'll get direct access to us, our full investing network, private off-market deals, and our exact playbook, and a community of investors who are closing deals every single week. That first property changed everything for us. We always talk about it. It was the true foundation for building generational wealth. And honestly, if we had access to something like this when we first started, we'd be 10 times further along by now. So if this sounds just like you, click the link in our show notes and schedule a call with me. Yes, me. I'll be taking the calls. We'll go over your goals, map out a plan, and get you ready to close your first deal. Let's get it. So they get 80% of the upside of that. Is that how that works? Okay, got it. So their trust, and I'm sorry to cut you off, but I just want to make sure that I understand so that the audience does. So they come to you and say, Bridger, you understand these crypto markets. I don't have to study them. I'm going to give you whatever, $100,000, and I'm going to get 80% of the potential upside by investing with you, as opposed to 100%, but not making a potential mistake, right?
This is how all investment funds run. So real estate funds, private equity, it's usually an 80-20 split. So we have $25 million in. If that 25 million turns into 35 million, which in crypto it can pretty quickly, that's a $10 million gain. Our investors take 8 million, we take 2 million. This is how, now if you're like, that seems like a lot or a little, I guess it's up to you. This is why hedge fund managers are the wealthiest individuals on earth. If you look at the Forbes 100 list, the number one category of billionaires is investment fund management. There's an old saying, the millionaires is the number one category of millionaires is real estate. The number one category of billionaires is private equity and investment fund management. And so that's the game that's one way to play in this game. That's what I'm doing. Fund Launch right now, we've hired a number of devs. I just had 2 interviews this morning. We're building out Fund Launch AI right now. It's a full AI platform to help people launch their funds much faster. So we're utilizing and going all in on AI right now as a company. So those are the things I am doing to not miss this wave. I think it is fascinating right now, what's going on. If you'd like, I can go more into blockchain and crypto. Do you want me to dive into that for a sec?
Yeah, I love to talk about that. And like, it's funny, like as the Wealth Juice podcast, we've shared our story. We've interviewed so many people. This is a world that we're like entering into now. And I feel like I have a duty to bring somebody in like yourself to talk about this, because I know a lot of people in real estate who are really, really good at what they do. And some of these people have now got into the crypto world, and I'm like slowly starting to understand, but I want to know what your thoughts are. Yeah, blockchain, crypto, like what you're seeing, even like maybe like more now, like news now, because I know it's like some people are bearish, some people are bullish. It's like it's a war of the headlines.
Yeah. Well, yeah, let's talk news around crypto, and then I'll talk about underlying tech of crypto. News right now, and we're filming this right in the beginning of December 2025. So we've had obviously a huge crypto adjustment the last 90 days. We've had October 10th was the largest single liquidation in crypto history. This is larger than FTX, larger than anything previous. We saw a number of major institutions and firms get wiped out completely. If you had pretty much any leverage in crypto, you were liquidated October 10th. We've been seeing the unraveling of that. Secondly, we have this crypto market structure bill that is looking to get past the Clarity Act through the House and the Senate in the next few weeks. What's interesting about this, so a couple things have been happening this month, all in the last 60 days. Vanguard just switched their anti-Bitcoin, and they've been not even neutral, anti-crypto sentiment for years. December 1st, they said, we're now opening all ETFs to our platform, which is crazy. This is the second largest institution on earth of asset, as an asset manager. Secondly, JP Morgan, who just a few years ago, Jamie Dimon said he would fire anybody who was trading Bitcoin at his firm, just announced they just opened their own cryptocurrency, JPM token, for institutional clients, and they're adopting crypto right now. We also saw Charles Schwab say they want to compete with Coinbase in Q1 of this next year. This is unprecedented. Now, what's interesting, while all those we have had an immense amount of good news in crypto, we've seen all of it sell off. Crypto just keeps going down. We've had a horrible quarter. I mean, crypto has had a terrible 90 days. Yet all this good news keeps coming out. And furthermore, you have institutions buying up these dips. A number of Congress people are buying these dips as they're voting on the crypto market structure bill right now. It makes me extremely bullish that there's a price mismatch. Now, a lot of people talk about the 4-year cycle of crypto. We may have had a peak on October 6th, I guess would have been the peak on the 4-year cycle. So there's a chance crypto historically has run a 4-year cycle. So 2013, 2017, 2021, and now 2025. It could still be the case. Maybe it's delayed. Of the 30 indicators of crypto cycles, those 0 have triggered. 0. So some people are like, the cycle's over, it's done, see you in 4 years. And I just go, I don't think it's the case. As being on the institutional side of crypto, I don't think it's the case. I'm seeing a maybe cycle theory breaking, or an extended cycle theory, or entering a super cycle as institutions adopt. That's the news side of things that I'm looking at right now. And I haven't sold. Our fund is all in. We have not sold. We're not selling this out. Like we think it's going to move up.
What I do love about what you just said is that from the people that I really, really trust, some of these are like just good friends of mine who have liquidated, or they've in the last 3 or 5 years, like gone all in on, they talk specifically Bitcoin. That's like the one, obviously that's the biggest crypto. That's the one that I know the most. But what I'm hearing is kind of what you're saying. And I think that if you're selling right now, retail, which I'm learning is me, or, whoever's buying as an individual, you're getting shaken out of, if institutional money is coming in, that's who you're selling to, right? You're selling to BlackRock, right? If you're selling right now. So I think there's an opportunity for the common person still to get extremely wealthy if you hang on and you keep buying, as opposed to letting institutions come in and be the only ones that become wealthy, right? I mean, I know that's like, what are your thoughts on that?
I think crypto, I'll just talk to my own experience. I love having crypto in my portfolio.
Yeah.
I have a good chunk of crypto. I think this is a wave. Yes, there's choppiness. Yes, they want to shake you out. I've never seen retail so bearish and institutions so bullish at the same time. Never in my and my partner's crypto history, we're at deeper extreme fear levels. If you watch the fear greed index, than when FTX blew up, then during COVID, there's more fear in the market in crypto right now than both of those times. And this makes me extremely bullish. I go, okay, well, this seems like a good time to enter and be in. I'll talk for just one or 2 minutes about the technology beyond blockchain. So I don't trade crypto. I invest in crypto. I try to find underlying tech that we want to invest into. So you mentioned Bitcoin. Bitcoin is a phenomenal piece of tech. 21 million Bitcoins to be, produced ever. We're about 19 million mined. Bitcoin has stood the test of time. It's never been funged before. It's never been duplicated. It's an amazing asset. I own Bitcoin. I like Bitcoin. However, I think it's naive for some to say, there is no second best, or there is nothing else matters beyond Bitcoin, because there's so much more use case in blockchain. So I'll give you a few examples. Bitcoin right now, it takes about so how Bitcoin works, every 10 minutes, there's essentially a new, think of it like a problem to be solved. And there's nodes around the earth that guess, think of it like a lock, and they're trying to guess the right key. And every 10 minutes, a block is rewarded to a new node, and they earn, whatever the rate is, they earn some Bitcoins. And that's how Bitcoin's got, every halving cycle gets cut in half. So it's every 10 minutes though, to send and transact on Bitcoin, it's a 10-minute block. Ethereum is very interesting. So Ethereum, if people are like, what even does Ethereum do? Bitcoin has about 20,000 node validators on its blockchain. To put that into perspective, XRP has 300 node validators. Bitcoin has 19,000. Ethereum has 1.2 million. Ethereum is by far the most decentralized cryptocurrency, and transacts, instead of 10-minute blocks, it's you can do a transaction on Ethereum in about 45 seconds, 30 seconds. 90% of all of crypto is built on Ethereum. Stable coins. So if you saw the Genius Act got passed in July, Scott Bessent, Secretary of the Treasury, they want to perpetuate stable coins around the world. They hope that a kid in Zimbabwe who earns a wage, instead of holding Zimbabwe dollars that are going to fluctuate a lot, they'll buy a US-backed stable coin, and that their money stays more based. It's just a $1 to $1 peg. The Genius Act said any stablecoin issuer in the United States has to buy US treasuries. And so what that does, it creates demand for treasuries. Genius move. It's called the Genius Act for a reason. Genius move by Scott Bessent to perpetuate the US dollar. And by the way, I'm all for dollars. I think dollars are great. I don't want the dollar to crash. But the number one blockchain they're building on is Ethereum. 68% of all stable coins are built on Ethereum. And they have to buy Ethereum tokens to hold. So JP Morgan, Bank of America right now are building stable coins. They build them on Ethereum, which is kind of cool. I'll share another one. So XRP, my XRP fans out there, XRP took that and said, we're going to go way faster. XRP can transact in, 5 to 10 seconds globally, which is pretty cool. You can send money instantly around the globe. The purpose of XRP is to be the back end rails of banks. There's 300 validators on there. A lot of them are institutions, the SEC, Federal Reserve, huge banks are these validators. And you have Brad Garlinghouse trying to push this new technology into banks. Every bank in Japan is already using XRP, which is pretty cool. Now, the SWIFT system just announced they're going to use a different blockchain, Linea, by consensus, which is a big punch in the face to XRP because they were hoping that would be them. I'll share one more just to give you an example of the underlying, actually two, sorry, I love this space. I'm going to share two more. Different one. California announced they're going to digitize 45 million car titles. They're going to put car titles on the blockchain. So for example, like I could buy a car from you and it would be like a Venmo transaction. Like instead of going to the title company and you got to go to the state, wait for your license plate to come to you, how it takes 30 days, 45 days.
It's also like really hard to sell a car. Like that's why people trade it in. So like I love, keep going. Yeah.
Yeah. So they announced they're digitizing their titling process. So we'd have a smart contract on a blockchain that I'm sending you 10,000 of these tokens for your car. You're sending me the car title. It happens on blockchain and it's done. And I could turn around and sell that car to somebody else, 5 minutes later. They decided to build that on the Avalanche blockchain because Avalanche has this very cool hierarchical structure that allows states and governments to work on it. So these are underlying use cases. I'm going to give one more, Solana. So Solana is the amazing technical founder on Solana. They're trying to solve for payments globally. No one's going to you can't check out at the store with Bitcoin. It takes too long. It's a 10-minute hash rate. You're 10 minutes to get these blocks produced. Ethereum is, 45 seconds. XRP is, 25 seconds. Still, I don't want to wait at the checkout for 25 seconds for XRP to go through. So what Solana did said, can we get that down to a millisecond? And what they did is they produced a very interesting blockchain. They decentralized and chunked their blockchain out. So for example, because a global, even XRP, to validate a transaction, you have to go through the entire globe, go to satellites, the internet. There's just, it takes 10 to 15 to 20 seconds to talk to all these computers around the globe. It's too long. So what Solana did, and sorry if I'm going down a rabbit hole here, but I think it's so interesting. They broke out people into regions. So if I'm in Japan, they have a blockchain validator in Japan that's local to Japan. If I go click to check out, it's a 2 milliseconds. The blockchain in Japan validates my transaction and makes it happen. And then later on, let's call it 2 minutes, 5 minutes later, it reports back to the global blockchain and they validate and true up the transaction. And if one of these Solana, the Japan blockchain group decides to fake it and they want to take over, well, if they put in a wrong transaction, they lose their entire treasury. And they have to, so to be a validator, you have to put up, tens of millions of dollars of cash on the Solana token and hold it in treasury. And if you give one or two bad, blockchain contracts, they will just steal all your capital. Anyways, very interesting technology they've built. So besides the point, their blockchain is, we underwrite for the underlying tech. There's a use case obviously for Bitcoin, but I think there's also a big use case for things like XRP, Solana, Ethereum, because there's just avalanche. There's way different use cases here. And again, this wave of technology is hitting. It's hard to guess which one will be the one that'll last forever. So what I do is I play a spread bet. I bet across a handful of them, if not a few dozen. And I don't trade, I invest, but that's how I think about it.
And is this just a norm for you, a DCA, dollar cost average per month? You're just putting some of your personal income into it. I'm just trying to give some really advice for people that are a lot of people that listen to our podcast are real estate investors, but for me, some of my income goes to, retirement. A lot of my retirement's honestly in the ground right now, but I'm curious, you just DCA each month or because of the fun nature of your business, is it different?
I used to DCA. It's a good strategy. You just dollar cost average. So every month or every quarter, you just put some money in. You don't even think about it. It's a good way to do it. For people that are just starting out, Coinbase is awesome. Just get on Coinbase. I like to buy, a handful of the top positions, and that's it. I just buy a little bit. Or the other option is you wait for dips. That's kind of what I do. So when you see it hit extreme fear levels, it seems like a decent time to buy, right? There's a big sell-off. You got to train your brain. Whenever it goes down a lot, I'm buying more. I'm buying more. I'm buying more. That's kind of how I do it. Yeah. So I'm more opportunistic to enter. That's how I treat my crypto.
Love it, man. I mean, look, so I can tell that you've been studying, just the way that you emphasize and the way you talk about it. You've been studying this for a long time, and you're somebody that if I were to point anybody in the direction, go follow Bridger on Instagram and YouTube, and go listen to some of his advice to if you're looking to get into crypto and blockchain, and then just funds in general. But as we start to wind down the show, I like to ask more personal questions because I like to get to know you a little bit. I'm curious about maybe the why behind what gets you out of bed every morning? What's the thing that you're trying to accomplish here? And you mentioned you're religious, so if you wanted to, I don't have any problem with you talking about that. I'm just curious about there's, as an entrepreneur, there's this engine that runs inside of us that for me, it's difficult to shut it off. But then I wake up some days and I'm wow, how did I get from 33 to 34? This is crazy. It just happened that, right? So I try to slow down and smell the roses every now and then, which is why I like to ask people about their why. What's the why behind what you do?
Yeah, my journey, I started 6 businesses those first years of college. They all were okay. my 6th business was my fund. I launched a fund in college, did extremely well. Then I launched Fund Launch that went to an 8-figure company. And the last 2 companies I've launched have gone to 8-figure ranges. I'm looking to get the 9-figure. Hopefully, we're going to get the 9-figure range here in the next about 12 months. I agree with you. Entrepreneur, I have this innate thing. I can't turn it off. I think about it all day. If I'm being honest, I've always had this vision of my life of this is how I'm going to be. I'm going to be one of those special people. I'm going to be one of those crazy, people. Now, let's talk about why for a second in business, just that category. To be frank, I know most people will tell you, oh, I wanted to like impact the world. Like I wanted to make money. Let's just be honest about it. My why was like money. People were like, what's the mission statement of your company? Make money, and make money for me, the founder, that's why you're in business, is to make money. Why else are you in business? And I think that's, by the way, that's not wrong. I used to listen to these speeches of these billionaires and they're like, follow your passion and you got to just do something good for and it was like, really? That's what you were doing when you were 19? Now I know when you're a billionaire, now that's what you think about. But actually back in the day, I don't think you were thinking that way. At least for me, that's how I thought. And was true. And it was for me. And actually we started to make good money. And in college, I was making very good money, 6 figures a year in college as a student. And then we ended up dropping out and we just kept going from there. Once I got out of this hump, right? That I'm poor, broke, zero. Okay. I've made a little bit of money. I actually own a home and a car and I'm actually an adult that makes some money. My brain started to shift a little bit. Now it was still okay, let's make money, right? So we kept growing our business and making more. And then we actually got an offer on our company. So this is the kind of a moment that shifted in my brain. So Fund Launch, I got an LOI in for $20 million. We own the company, me and my partner, 50-50. $20 million LOI. I got another one for 25 and another one for $40 million. I'm 27 years old at the time. I was like, dang, that's pretty cool. Right? I'm like, we could exit and yeah, we'll stay on for a year or two, but at 28 years old, I could exit with 15, $20 million, 10, maybe 10. That's so
generational
cool.
Still. It's generational. Either way.
Oh yeah, huge.
Yeah.
And, but then you got to pay taxes and you pay all that off and stuff. And me and my partner sat down. I was 27. My partner's 24 at the time. My other partner's 27 with me, 27, 28. And we we're like, huh. And we started to talk to mentors. And the consensus we came back was a lot of people become extremely unhappy after selling businesses. Now, some people, they have to find a new, almost every entrepreneur that's driven like that, they sell and they have to find something new. And this comes back to an overall thesis that I started to develop in my brain that humans are designed to work. My happiest days of my life are when I'm working extremely hard on something and I hit my pillow and I'm exhausted and I got to wake up the next morning and go at it. Those are exciting days. Yes, the pina colada on the beach, those days come and go those are fun for a week, or two, but and I'm going to define work broadly. Work is working on anything. You can work on your kids. You can work on your golf game. You can work on your garden. You can work on a business. You can work on a charity. But I believe humans are designed to work and happiest when we work. If you look religious, one of the first commandments God gives Adam in the Bible is to go and work, till the ground. I think work is part of the human condition. And yet we spend so much time trying to avoid work. We do everything we want to automate. We want to systematize. We want to just stop working in any way, shape, or form. In reality, I decided, okay, if we sell this company, what are we going to do? And I thought, I'd probably want to build this same business. I'm here with all my best friends. We have a good business. We own the whole thing. We have great clients. And how good can we be? How good? And we have a lot of time here. I love the quote, people underestimate they can do they underestimate they can do in a decade and overestimate they can do in a year. And I thought, how many we got 3 or 4 decades minimum ahead of us. If we just keep this thing going, what could we do? And yeah, I don't want to work 80 hours a week. Maybe I work 25 or 30 hours a week, but still, it's cool to be a part of something. And we turned down those offers, if you can't tell. We turned those down and we went all in on this growth mindset. And yeah, there's been ups and downs, but we sat there and this is cool. And my mission, back to the mission. So the mission originally was make Bridger lots of money. We then built our mission statement at our company was democratize Wall Street. We're like, let's be on a mission to actually democratize Wall Street, make high finance accessible to all. That would be pretty cool. And if you ask me now personally, like what does drive Bridger right now? I've made good money. And I still, obviously I like making money. Like money's, there's nothing wrong with making money. I want to see how good I can get. I'm a member, and this, I'm going to mix this with religious a little bit, but I want to see how good I can be. Can I be excellent? Can we build products that are absolutely excellent? Like how fun is that when you build something and other people consume it and they like love it? And we're building a lot of tech right now, investment products and other things. I'm like, it's really cool to build something that people really value and really love. So that's what we're working on immensely right now. And I go back to so I'll go all the way back to a religious standpoint. I believe the purpose of life. Like, what's the purpose of life? I'm a believer in God, believer in Jesus Christ, and I'm a Christian. I'm a member of the Church of Jesus Christ Latter-day Saints. The Mormons, the crazy Mormons, we believe we're just a Christian church. We're just Christ Church, and our purpose of life is to become like God. Not to become God, become like God, become godly. How, think of a perfect father. Can we in this life progress and become like God? And I have learned more about me, Bridger, by running a business than anything else, because a business pulls you and pushes you in such crazy ways, like hiring people, firing people, working with customers. Like you got to work with interpersonal relationships with people. How do you like it makes you level up your life like crazy. I think the same thing about kids. I have 2 kids. Having kids just makes you a better human being because you have to be. It makes you like, okay, I'm a dad. What kind of dad do I want to be? How do I want to show up for my kids? What kind of example do I want to set for them? It makes you just naturally become a more sharp, excellent human. And the goal of life, I think, is to become as godly as we can in all aspects of life. So I'll pause when there's my long discourse, my speech. But anyways, take that any way you want.
No, I don't think anybody's ever broken it down like that. And I'm not Christian, I'm Jewish. But I love having conversations with people who like firmly believe in becoming better, a better version of themselves, at progress, being addicted to progress, like having that, not to create false summits for yourself, but to just know that you can become better and a better person. Like all of that to me is super exciting. And I want to take it back to the point you mentioned about work, where I think people have the stigmatized version of work that it's like severance, like you're in this cubicle with this like fluorescent lighting, like at this computer, like just like hating, like work is the hate, like the shit that you hate to do. And to me, I agree with you. I think we're meant to strive for progress, and work shouldn't be stigmatized that way. It should be like everyone, like you said, not everyone's meant to own a business, so I don't want to say that, but like if you start a business or start something of your own, I firmly believe that you will be more tolerant, you'll be nicer to people, you'll be more understanding of what people are going through, and you'll turn the temperature down a little bit. You're less likely to scream and yell and leave a bad review because like what maybe that business owner doesn't even know that employee is doing this thing. Like to me, I swear to God, it happens all day. Like I literally had a plumber come to my house and actually try to scam me into spending $10,000 to fix a pipe that my plumber that, my trusted one wasn't there. And he came and he's like, dude, this guy, like he lied to you. This is $500 fix. And because I'm a business owner, I didn't leave a shitty review and yell at this guy. I was like, you know what? I'm just going to choose not to do business with this person. But it made me more calm about the situation. So again, not everyone's meant to be a business owner, but I do think it helps you become, you see the world differently. You see the upside that you can have as like from a money-making standpoint, but then also the responsibility that you have to provide for others, not just your family, but other people. So I love this type of conversation, man. I think it's awesome.
Yeah, I couldn't agree more. Yeah, it makes entrepreneurship pushes me at least in a crazy, crazy way. It's made me a much better human. Anyways, I recommend it. If you want to go on the journey of a lifetime, start a business. And it will push you in a lot of ways.
I love it. I know I respect your time. I know you have something coming up at the top of the hour. This has been an amazing convo. I loved every second of it. If people want to learn more about you, your business, your journey, how to start a hedge fund, anything really, what's the best way for people to get in touch with you?
Yeah, we try to put out a lot of stuff for free. So we just give a ton away for free. So if you want free stuff, we're on, I think most social, if not all social media platforms, but the best would be YouTube. If you YouTube Bridger Pennington or fund launch or how to launch a fund, we should pop up. We're the top creator on that whole space. And I have hundreds, I don't know if it's thousands now, but hundreds of videos all teaching funds. We used to have a course that we sold, like a big course. And we've just dumped a lot of those videos on YouTube for free. We just teach and teach and teach for free. If someone wants help implementing, yeah, give us a call. And that costs money. Well, we have 15 coaches and lawyers and other groups to help you build a fund, but we try to teach as much as we can for free. You go to YouTube, fundlaunch.com, or we built a full platform called Alt Street. Alt, A-L-T and S-T, Alt Street. It's like masterclass. There's 10 full masterclasses on there. It's completely free to use to educate more people. And our mission is to democratize Wall Street. If it's not free, it's not democratization. So it's got to be free. That's how we think about it. Anyways, thanks for having me. There you go, though. Fun episode.
Yeah, thank you, Bridger. This has been awesome. I appreciate you coming on. Before we wrap this show up, I want to leave you with this. If you're listening to the show, chances are you're doing pretty well in your career. You're making maybe 6 figures. You're putting money into your retirement accounts, maybe stacking some cash in a brokerage account, but you're still waiting for that next level. And here's the truth. Waiting just costs you time. Every month you're on the sidelines is another month you could have had a property paying you and another step closer to financial freedom that you didn't take. Ryan and I know this because we stayed on the sidelines too long. We talk about this sometimes. We had the money, but not the guidance. And once we finally got our first property, everything shifted. It was the catalyst that built our entire portfolio and ultimately gave us freedom. And that's exactly why we built the Wealth Juice Inner Circle, to cut out wasted time, just give you the exact blueprint and surround you with a network of people who are closing deals every single week. So if you're tired of waiting and you're ready to finally get your first deal, click the link in the show notes and schedule a call with me. Let's map out your strategy and get you moving before another year slips by.